Now let's see how those U.S. jobless numbers are moving the currency markets. Trish Louis, of course, joins me from the Singapore newsroom. Awful numbers from the U.S. How's that affecting the forex space? Trish?
Awful, dreadful, certainly not a pretty end to the week for currencies in this part of the world following the terrible U.S. jobs numbers overnight. Well, risk aversion was already on the rise even before the non-farm payrolls were released in the U.S. last night. We had geopolitical concerns in late Asia, trading with North Korea firing the fresh missiles, and disappointing data as well out of Europe. This risk aversion was already very much the theme, and we continue to see it this morning. And this morning, the ones that were first off to the downside were actually commodity currencies. Aussie and Kiwi are down, and the yen is stronger. Risk aversion theme and the sell-off in commodity prices both have recovered these commodity currencies, but they're still down very much on the week. And both Aussie and Kiwi dollars are headed for their biggest weekly loss in 7 weeks. The Australian dollar has slumped about 2% against the greenback on the week. The Kiwi dollar is down about 3%. Traders expect that this could continue to be the theme for the rest of the session. Rest of Asian currencies are surprisingly still holding up very much on the week, but not by that much amount. And the traders are saying that possibly these Asian currencies will probably shed their week-on-week gains before the day is over, given that the U.S. markets are closed tonight, and we have the start of the U.S. earnings season as well in the coming weeks. So risk appetite is definitely going to be scaled back. Cass?
Trish, how about the yuan? China expanding its yuan settlement trade. What do traders make of that?
Well, the talk is that as China is pushing for increased representation in the IMF through the special drawing rights-backed bonds, it may have to compromise with this move by actually ensuring that the yuan moves faster towards yuan convertibility, and this will, of course, inevitably result in faster appreciation of the yuan. The equation comes down to this: the IMF bonds are backed by special drawing rights, the SDR, which are currently weighted only in 4 currencies, namely the US dollar, the sterling, the euro, and the yen. And China wants the yuan, is likely to push for the yuan to be included in the SDR's weightings. And in order for it to do so, it will have to have the yuan fully convertible in both the current and the capital account. So people are looking at it as another step towards a full yuan convertibility and a faster yuan appreciation, more so than most markets would have expected. Back to you, Hess.
Okay, our very own Trish Louis, thank you.